Okay, guys, just some housekeeping, organizational stuff while we wait for everyone to roll in. I'm going to talk. We're going to share a few different screens. I've got some slides for you as well. If you have questions along the way, as they occur to you, please put them into the text chat immediately. The reason I ask you to do that is sometimes I can see questions happening or more than one person has a question and I'll address it on the fly. Otherwise, if you post a question there and I don't address it on the fly, we will address it at the end or at a pertinent spot. I typically pause for questions pretty frequently. And also, since this is an actual boot camp and not the introduction to the boot camp like we did last weekend, it's going to be a lot more interactive. I literally treat this like I'm sitting in a classroom with you guys. I have the background of doing that. I taught at a university and college. I taught at IBM and Microsoft as a trainer, as a sales trainer. And so that's one of the reasons it's real important to use your name here and not a real obscure nickname, because I do want to get to know you, because that is the way that I can help you individually by knowing, your background and your trading experience. Some of you have a lot of it. Some of you have very little. Some of you think you have a lot of it and don't. That's actually a fairly common problem. I've been there. I know what that's like, and I'm there frequently still. This is always a constant learning experience, and you have to embrace it that way. Okay, or have a bad experience. That's a very good point, Amy. Amy is here. She's going to be both a student and a teaching assistant, because some of this material she has seen before. She's a graduate of the workshop we did in the fall of 2019, as are many of you, but many of you are not. So we're going to have to bridge that gap a little bit along the way. Let's see. Lee is here. Let me unmute Lee so he can say hello. How you doing, Lee?
Hi, Jeff. Hi, everybody. Yep, I'm good, thank you. I joined a bit late. I was busy trying to round up some cats, but I've got them now.
Yes, cat herding. We've been doing quite a bit of that. Okay, so I'm instructor today. Lee, as most of you know, is co-founder, and he actually does instructing as well. And there's some recordings in the library of material he's done. If you're new to us, I would strongly suggest you check out the library very soon. So I'm going to put it up on my screen so you can see where it is. It's on the website. You have to register on the website. Once you have, you'll see member access library. This is all in the email we sent you, by the way, that tells you how to get to the Slack, and I'll tell you more about the Slack in a second. But anyway, this is the library. This right here, Docs 2019 Setup Workshop, is the entire fall course we did over 3 months. A lot of the stuff I talk about today is in there in some detail, and there's lots of examples. And you can see it running in Ninja 7, which is a good point. Platforms don't matter, and I'm going to talk more about the platform stuff in just a minute, because that question's come up. Anyway, Lee has done some really interesting sessions, and if you look here, you'll see why does price move, unfinished business and order flow microstructure, reading traded volume, delta, deep dive, footprint charts. These are all clinics we've done in the past, and they're all accessible to you. This whole library is, and there's like 400 hours of stuff in here now. So by all means, take advantage of it. And if you need a place to start, it's here, the workshop, with video number 1, and go through them in order, one by one. Just trust all of us that have done it, that's the right answer. It will answer so many questions. It'll give you questions you didn't know and answer them for you, didn't know you had. Okay, moving forward. Today, let's see, let me get up the story for today, and you can see some stuff running on my screen here, which I'm going to talk about in just a minute. Hang on. Okay. We had a little bit of energy getting everybody here and organized, and being the first session, that's not a surprise. So anyway, this is us. We're Trading Research Group. The typical risk disclosure stuff applies. This is educational. It's really hard to do this in real life, and I've been doing it my entire adult life, 47 years, most of them profitably. And I tell you, you constantly have to be sharpening your skills and enhancing your education. This is more difficult than medicine. If you're a former doctor, retired doctor, and there are a few here, you've studied for 12 years, and that that's what it takes for something that's really complex. Well, trading can be like that. So don't think this is stuff you can just come in and learn and you're going to be, you're going to do a combine next week and you're going to be profitable the third week from then on. It's just not that simple, guys. So stay with us and we'll show you the ropes and how to shorten that learning curve. This is today's session, session 1, as I mentioned. I want to just put this up here because I really need to make this clear. We're having a little bit of issue getting people to go to the right places and whatnot. Everything we do is organized around the Slack. So if you have a question, the answer's there, and you have to participate there or you're really going to get lost fast. So please make sure you've joined the Slack. Make sure you introduce yourself in the channel called Introduce Yourself. All of this stuff is in the email you got when you joined. This particular event, this boot camp, has a private channel, which is right here, and that's where everything about this will be posted. I just posted a little while ago the link for the next session. So this is Thursday's session right here. You click there and it will sign you up and tell you what to do next. But literally everything we do is here. If it's an announcement and it's really important, we will post it in announcements. Alerts is things like, the market's limit up or limit down. But it's really critical that you follow the structure or you're just going to be lost. And I really have to emphasize that this is a really tight group of really serious people of all different levels. We've got a 20-year-old here who's making tremendous progress. That's David, who's typing a few things in there. And but the one thing we all have in common is that we are not here to screw around. We are here to learn and to help each other. And everybody's honest, and everybody, if they want to, they share their actual results in their sims or with real money. And it's really a no BS zone. So please follow the instructions. They're fairly clear and they should point you everywhere you need to go. On that same note, there is absolutely no such thing as a stupid question. I want to hear every question you have, but if your question is, how do I register for the session on Thursday? I am literally going to toss you out of the room, okay? So I'm just establishing the rules here. Okay, everything like that's in Slack. All right, moving on. This is what we're going to do in our agenda today. I want to review some critical concepts, and you're going to see some of the slides that I used in the intro session. And while we're doing that, I am running live right behind this. So if anything exciting is happening, it will be fairly easy to hop back to here. And just so you know what you're seeing up here when I do that, I am running the 4 indexes right now live. This is Jigsaw. Their depth and market, actually, it's not just the depth of sales. As you normally see on a dome with just orders, this is actual trades going by, and I'm going to explain that all in a minute. I also brought up an example of the LRCs here so we can watch it as we're talking, and there is also a footprint under here, and I will be addressing that as well. So when I talk about jumping out to the main screen, this is what we're talking about. But before we do that, again, I just want to get through kind of broad strokes and housekeeping and organization and how this whole thing's working. And then I want to take a stop and see if anybody has any questions. Everyone's on the same page. And then we're going to actually start the material for today. So the review of the critical concepts I'm going to do in a second. Point 2, art of learning. I cannot emphasize this enough. That's why I say it every time we talk. And again, if you ask the people that have been around, your worst possible way to approach any of these sessions will be to come in with what you know, like to say, well, I do this way and I trade that and I've been using this and that for 3 years. Forget all that stuff. This is going to be completely different, and even bringing that up in the chat will just be a distraction for you. So think of this like you are a 5-year-old and you are in 1st grade and we are saying, okay, this is the letter A. And if you want to make the word at, you take the letter A and the letter T. Literally try to keep it that simple in your head. Trust me, it will be useful for you to do that. Terms, yes, linear regression channel, LRCs. I will cover that one at nauseum today. So hold on to your boots for that one. You're going to get so tired of hearing that term. You're going to see it in your morning coffee. So be a tabula rasa if you can, be a blank slate and just try to absorb. And Amy made a good point. You know, these things, you're going to have to listen to this more than once. And some stuff you're going to understand, and some stuff it's going to be 2 months from now, and you're going to come back at this and you're going to, okay, I get it now. That's how this topic and this type of learning works. It's not just like I'm going to explain step 1, step 2, step 3, and you're done and you know how to do it. And it also takes practice. It takes tons of practice. What does that mean? Tons of practice. Okay, I learned the concepts I'm going to teach you by figuring out the math of this, and it just seemed like a good way to teach myself. I did that in 2013 and 2014. And then I spent the next 36 months testing it and changing the layout of the screens and what the colors are that you're seeing on here and what particular items. Like Jigsaw is a toolbox. I can make the domes look any way I want. So what columns do I need and where do I need them, and what do I want to reset, which I can do anytime I want, like that. And all of this is relevant, and it's literally tons and tons of material. So you have to kind of let it come to you organically. And again, I promise you it will, but you need to give it time. Okay, so the questions come up a bunch of times. Do I have to be running Jigsaw or Sierra with or without the tool that Lee just made? And if you're not familiar with what I'm talking about, again, if you go to the Slack, the channel about Sierra chart, Lee posted a template there. And platforms SC. You see, there is kind of a logic to all of the different channels. And he posted this, and this is a Sierra chart implementation of my Ninja Jigsaw stuff that I'm going to show you. And that's where you'll find it. So do you need my Jigsaw or his Sierra to do this? No, you don't. You could do this with Bootcamp. You can do it in any order flow, and there's the keyword, order flow, professional level order flow trading platform, and we just named 3 of them. Can you do this in Thinkorswim? No, it's not even possible because they're not giving you the data. Can you do it in a depth of market type display that just has the orders? So, you know, where the price is down the middle and we see the orders on either side, like a basic dome, not depth of sales and the actual market trades as they're happening. No, that's another really important point. If your platform can't do that, you won't be able to practice. That doesn't mean I can't teach you what the value of it is and the concepts of it. But if you want to get good at it, you're going to have to figure out a way to practice and find a good practice platform. Okay, so that's a really important point. And this last one, I just can't emphasize it enough. What you will get out of all of this stuff, but particularly this kind of material where we're looking at an underlying idea of price action and order flow, and we're looking at it on one platform, and maybe we're looking on Jigsaw or we're looking on a chart. It's really not the chart or Jigsaw that matters. It's what we're actually looking at that you need to be thinking about. And to do that, you really have to apply yourself. This is not the kind of webinar you can turn on while you're doing something else or be driving in your car listening, although that's a good way to review it. You're going to have to really pay attention for this to make sense. Okay, so end of the admonishment, but that's all very true. All right, I'm going to stop here for just a second. I see some great questions, like the one about how many levels. The more the merrier, Nate, for depth. A CQG gives you 10. I have a CQG connection too, and whenever I turn it on, I feel naked because I see more. Here you get 10 both ways, not just 10 total. At 20 level depth basically is the way to refer to that. And as far as I'm concerned, you need that. Again, if your budget doesn't allow it or whatnot, that's okay. But you'll be at a handicap because the inside bid and ask and the first 5 levels in either direction, particularly in normal market conditions, to people that don't understand order flow will seem like, well, God, how could you care about that? That's 2 points away. Well, that's exactly the point. Are there people putting orders 2 or 3 or 4 or 5 points away? Are we working a range and those guys are positioning? You can see it's happening right down here and it's happening right up here. They're lining up to sell and they're lining up to buy because we're in a range, and that's the way you trade a range. And we're going to talk a lot about that. So, but those are really good points, and you really need the more information you get that's relevant, that you learn how to process, the better you will be at this. But the other hand side of that is you can really overwhelm yourself up front. So, understand your own limitations, your budget limitations. That's the answer to that question. Yeah, there are people depending on it. Kawika just made a good point, and he's one of our workshop graduates, a motley crew member, as we call them. And, a lot of people just watch the inside bid and ask. It depends on the kind of trading you're doing. I'm a scalper, but I'm a range scalper because I scalp size sometimes, which means I'll scale in and out. And to do that, you really have to pay attention to the action 10, 15, 20 ticks away from the current trade. And you have to keep an eye on where blocks are going off too. And you can see I'm seeing that here. That's an additional piece of information that we will talk about more. But if we get too distracted here, you literally will never get the material you came for. So let's try to stay on topic, and we'll fill in as much as we can. All right, I'm going to pause for a second and look at questions and see if I missed anything before I move on to actual material. Okay, Amy made a point I want to just clarify. Please feel free to challenge me on anything I say. I do know what I'm talking about. I'm trained in math. I'm trained in trading. I've lost a fortune. I've probably lost your life savings, most of you, in a day trading. I've done that. So I've lost $150,000 in a day. I've traded 7-figure accounts. There's very little in trading, math, business that I haven't done. I'm in venture capital. I've been in a bunch of different Fortune 10 corporations. I've been a principal in 26 startups. Again, not because I'm a really cool guy. I'm telling you that because look, if you want to bring something to the conversation, please do, but just keep that in mind. Don't tell me, well, I trade MACD crossovers using RSI. I'm going to say, great, you're a kindergartner in this room, so keep that to yourself because that's not relevant. But if you say, well, you know what, your math calculation is wrong there. Someone did that once when I was teaching and they were actually correct. I put in an error, and I was actually putting up a formula. I put an error in it because I wanted to see if anybody actually could read it. And a guy was really cool. He emailed me privately. He said, I didn't want to bring it up in class, but your formula had an error. And I sent him a gift certificate to Amazon for a gift card because I said I wanted to see if anybody noticed. All right, other questions. I'm going through them. LRCs is what we're going to talk about next and all day, and that is a linear regression channel. I'm going to define it and explain it in just a minute. Let's see. Can I highlight my arrow? Okay, this is a problem we have, Jack Croft, and I apologize, but there's nothing I can really do about it. It is a zoom issue. I can make it bigger, but if I do it, what Zoom does, and I'm moving it around now just so you can kind of see it. What Zoom does is they shrink it back down. I've had a long conversation with them. It's actually posted in the Slack. It is because I am running QHD monitors. All 3 of my monitors, 2 are portrait, 1's landscape in the middle. They're all QHD, which is the wide full HD resolution. If you're watching this on your phone or a tablet that doesn't have the capability to at least go to like 4K, then you won't be able to see it well. So there's nothing we can do about that. This is something you really want to watch on high res anyway. If I dumb it down to regular HD, we lose a lot of the information. So I apologize. There's nothing we can do about that. We are aware of it. Okay, let's see. I will do that. Okay, Amy suggested if I move the mouse a little slower, that helps. Yeah, that makes sense because I talked to Zoom on Saturday, and apparently they have some silly algorithm that's re-proportioning the screen real time to whatever resolution you're watching at. So if I go slow and, let me show you my mouse pointer, what I can do here just real quick. I tried it one way of making it larger that kind of worked. And as long as I'm not trading live, I can do it. Okay, so tell me now, is this pointer big to you guys? Yes or no? Is that a big pointer? Say it in the chat, anybody. Same, okay. See, here's what's hysterical, okay? For me, this pointer now, it goes from 25 to 20 on my dome. It's 4 inches high, okay? So that's the nature of our problem. And again, I apologize on behalf of Zoom, but and see now it's so big, I literally can't like reduce it because I can't point sharp enough. Okay, All right, we're back. All right, let's get class started. And I understand all these limitations. I also talk real fast, which is another one. So feel free to tell me to repeat something. I will try and I know some of you are translating to another language in your head. Again, I will try to use words that translate easily and whatnot. But if you don't understand something, by all means ask, and we will get it. Can I tell you on the page where I am? Okay. Um, yeah. All right. First of all, let's just review. This is some material from Saturday, but it's really, really important for for this whole class and for trading in general and for order flow in particular. So, I just want to review these points. They're givens here. These are just the truth. This is the gospel, okay? So markets are auctions. Price changes when buyers and sellers don't agree. And they do that by bidding it up or bidding it down. And if you watch the dome, that's pretty easy to see. Let's look at that for a minute. Here it is happening right here, real time. And I'll clear it all out, all the colors, so you can watch it. And you can see mine kind of shows blues and reds. Blues obviously are buying going up, and kind of pinks and reds are going down. And if you just watch that action there, you can literally see the auction happening. And I literally want every single one of you right now in your head to imagine the guys yelling at each other in the pit. I've got 12, do I hear quarter? I've got quarter, do I hear half? I mean, that's literally what's happening. But it's happening electronically, and it's happening really fast. And it can be really distracting because of that. It can also make you feel like there's more momentum than there actually is, because you're seeing so much movement up and down. But the reality is, if you go over here and just watch the price, we're really not moving around all that much. Even on a 15-second chart, watch this little candle forming here. Each bar is 15 seconds. And then watch the activity on the dome right next to it for just a minute. And the point I want you to get from this demonstration is that, and NQ is an even better example of it, and that's this over here. I'm trying to make my mouse real big, and it's the second column from the left. That's NQ. And it's even crazier over there. So, but the same applies, guys. And this is an important exercise. If you pull up your linear regression equipped chart, so now I've got NQ, and watch the dome over there and watch the chart, and notice that the two have a completely different effect on your brain. The dome looks completely unfollowable. It just looks like random noise. It's jumping all over the place. How do you know what's going on? And then if you look at the chart, it looks like much more orderly, and you can actually, well, it's really not moving all that much, is it? So what this class is about is the synthesis of those two states of mind. It doesn't matter what the color is. It doesn't matter if I use the Windows highlight feature, Thomas. There is no way to fix it. Trust me. I have literally spoken to Zoom and everybody, and I'm a ex-Microsoft guy with the title of Windows Guru. I'm one of 39 in the country that have that title in all of Microsoft. So there isn't a fix. I apologize. Okay, so the synthesis of those two ways of using your mind is what this is about. And it's critical that you understand what I'm saying, that the energy you're seeing on the dome to your brain, because of the way it's moving, is going to feel more frenetic. It's going to feel like more is happening than really is. And so and probably the most important part of making this transition from trading over here on a chart and understanding the dome, which is really where you need to trade. If you're going to trade as a professional or any sort of serious amateur, you have to trade on the dome. The chart is nothing more than a conceptual and contextual model for you. But the action and your expertise and your ability to profit are going to be on the dome. And that's another given I'm going to state. So again, right now, whenever we go to this type of a screen, I want you to just think about that. The energy you're seeing in this up and down movement and how it's making your brain think. And then look at, on the chart, even a chart as fast as a 15-second, which is a really fast interval. I mean, obviously, if this was a 5-minute chart, it wouldn't be moving around very much. But this is a really fast chart. And even so, it's a relatively quiet little range we're working here. But boy, if you watch the dome, your brain would be telling you the exact opposite. I mean, it's just going up and down, and whoa, look at that, and there's a sweep. And yes, those things are all happening, but they're happening within a really defined area. And that's what the LRCs are about. And we're going to talk about that in a lot of detail more next. So that's the center of our conversation. Okay, technical analysis again. Number one, I don't care. And if you tell me, well, there's a support at XYZ, A, no, there isn't, and B, I don't care. One of the beauties of trading on the dome is that support and resistance are evident. They're self-evident. They point themselves out to you as it's happening. And what does that look like? It's real obvious if you're using Jigsaw or a dome that can create a live footprint, which this one's doing, and then you just let it get added to as the price continues to trade. So what I've done is I preserved this little range, and I'm clearing the right side and the left side of it as the trades go by. Those are the live trades that are executing, and then the totals are getting added up into this little footprint and over here on this volume profile. So I'm actually getting a really good sense of the auction by watching that and see, God, look at that. See, that was a perfect example of a really tradable event. We had a high volume node and we pushed away from it on really aggressive energy. So looking at a chart, you would have never seen that happen, but you watched it real time. And if you missed it, go back and watch the video. But as I was describing what is a high volume node here, we sold away from it really aggressively. So right now, the level in play is 97.50 to, call it 99.75, this chunk right here. And you don't need any sort of other tool to trade right now. I don't care if you're looking for a long or a short entry to keep for 6 months. This is telling you whether now is the time to take it or not. That's what's happening. And so that's why this is such critical stuff. And whatever's on the chart from an hour ago or a year ago or a month ago or 4 hours ago is irrelevant right now. Right now, all that matters is what's happening right now. And if we get to a level that, and again, pick one, it doesn't matter, a VWAP, a MACD crossover, whatever, and exponential moving average, take your pick, support, resistance, whatever it is. If we get to one and it's an obvious area that's getting sold or bought, you'll see an event like we just witnessed. And in fact, we're seeing a level here that's starting to get bought. So if I kind of reset the sides again, and let's just let it develop. See, we're developing a high volume node right here. So how do you interpret that? If we go below it, we're going to get sold aggressively. If it holds, we're probably going to come back up to this one. So this is literally a real-time order flow read on this action. And again, we don't care what else the chart told us was from a year ago, a month ago, an hour ago. All that's relevant right now is if that level can hold or not. If that level continues to get sold, then you've got a short that's going to just keep working. And it worked from up here. There it goes. Okay, so the shorts are controlling the game here, and every time there's a high volume attempt to get it bought, the shorts win. So there's a real-time order flow read that just took us from 99 down to 88.50, 10 handles. You could have made your living today just trading that one setup. But that's not why we're here. Those are all in the videos, and I will come back to that, but I need to get to linear regression, which is how we know that. Okay. So again, the charts can be wrong. I can make a chart that proves anything I want, but watching the real-time action is always correct. And the charts help me put it into context. And that's what the charts are really useful for. For example, here's a 5-minute chart or 2-minute chart. Let's just blow it up. Okay, that action we're watching in the context of the range of the whole day and this level right here that was previously bought is really significant. Also, that one back there is significant. So that's how we can interpret those levels. But the reality is when we're going to trade them, the only thing that matters is not what they were on that chart before, but it's literally what is happening right now. And you can see that area that I described is still getting sold. This was that second high volume node. This was the first one. And so literally the market is doing what's called cascading down. It will move down in a sudden move. And then when it gets there, it will consolidate for a little while as people try to buy the low, or the sellers take their foot off the gas would be another way to interpret that. And we'll pause, we'll try to consolidate, we'll fail to consolidate, and we'll continue down. And how long will that go on? It won't go on based on a previous level. It will go on until, guess what? More buyers than sellers decide they want to go the other way, and then we'll go the other way. So it's really important to understand that that's the nature of order flow. It's either in ebb and flow, or it's in some sort of price discovery, or it's in high momentum move one direction, which is basically price discovery in one direction. I'm going to elaborate on all those different types of action. Right now, I'm kind of just throwing them out there because you're going to hear it a lot, and you'll be able to kind of consolidate it as we talk. And also, I will explain how these linear regression channels behave as different events happen. And you're seeing an important one right now, which is the only reason I'm pausing on it. We have this larger one, which is basically the range. This is the range within that range. Again, purely statistically, I'll explain that more in a second. So if the top of both of those gets violated, we have, in effect, a black swan. We're breaking out of a 99% event. So that means odds are we're going to come back into the range, or we're going to leave it aggressively. And that's what you saw happening up here. If you had been looking at that when we were at those levels, the LRCs would have looked exactly the other way. And so I'll talk a lot more about this. I'm literally just kind of babbling an overview with these points so you guys can kind of not only understand the point I'm making here, but understand how it relates to the stuff we're going to be seeing. And yeah, if this feels like a fire hose, it is. You know, again, we're going to put you through boot camp. That's why we're calling it boot camp. This is going to be really intensive, a lot of information in a really short amount of time. So you know, buckle your seatbelts and watch the videos over and over again, because I'm not going to go slower. I'm going to keep this pace. Okay. So all charts are wrong. Charts are useful for context, however. Forget any price-based indicators. Well, wait a minute, Jeff, you're using a price-based indicator right there. No, I'm not. I'm using a statistical analysis of a current group of trades that I'm concerned with. Notice how I'm not concerned with the prices they went off at or the trend of this channel, because it's not a trend. It is a regression. And what's important is its boundaries. That's all that's important. And because it's calculated on a very specific interval, and that interval isn't changed to suit my fancy, I don't zoom out to a 2-hour chart with the LRCs on it when I want to find something that supports my hypothesis, because that's what traders do when they're retail. They go look for indicators that tell them what they think to be true. And that's why retail traders don't consistently make money. Professional traders look at the market, and the market says, here's what you need to do. And then we go to our tools to look for good places to actually execute the thing the market is telling us we should be doing. It's literally 180 degrees backwards from the idea that you use an indicator to tell you where to trade. So that is why we just emphasize this over and over again. They are absolutely, completely worthless. Any price-based indicator, okay? Moving on. The only thing that matters is the auction. And this is my motto. I've been saying this for, I don't know, 30 years now. It was one of my mentors taught it to me. All trades are scalps until they prove otherwise. And, you know, if you get a good entry on a trade and it just goes your way immediately, as a good trade does, then, you know, if that's your intraday swing and you're planning on holding it for 2 or 3 hours, what more could you possibly ask for than having that sequence of events? Entering a trade with the idea that it's a scalp, but if I get it right, then it's going to really start working, and then I can get my stop between the current trade and my entry, and I'm just going to rock and roll with that, baby. That's how you get a really good intraday trade. Not by looking at a chart that has a 2-hour, a 4-hour, a 4-week, and a 6-month interval all at the same time, which is what all the Furu people will tell you. But interestingly, none of those people actually use that stuff. They sell it. We use this stuff, and all the people here are using it, and that's why we're not a Furu zone. Okay, so I think these things I pretty much all covered, what works and doesn't. I'll talk more about playbooks and whatnot in another session, but I really want to get in the meat of what an LRC is again and why it matters. So let's start with this diagram on the right. And whether you have training in statistics or not, if you ever had a class in any school, whether it was kindergarten or college or anything in between, and they graded you on a bell-shaped curve, this is what they did. The C's are right here down the middle. They are the mean, or more or less, okay? And then, these would be D's and these would be F's going one way or this way, depending on which way you're counting. And that would be B's and A's going the other way. That's grading on a curve. You cannot ask for a simpler or more common example of how statistics are used than that. And if anyone doesn't understand that example, I'd be stunned. But if you don't, please tell me and I'll try to think of another one. But that's what a bell-shaped curve and what statistics are all about. And so when we say standard deviations, what we're doing is we're saying, well, if the middle people are C's, then, if we go one standard deviation, or it's also referred to as a sigma, if we go one sigma away from that up, we'll get to the B's. And if we go two up, we'll get to the A's. And then there will be some crazy, 1.3 of 1% people that, not only get it right, but they have something to add that's better than 100% right. I guess they grade on higher than a 4-point scale now, and which I don't understand, but that would be an example of that. So the reason that this is so important is because it's a very, very objective way to measure any group of data. It doesn't matter what it is, whether it's grades or whether it's how a group of grades plot. So for example, if you took everybody's college GPA and what their SAT score was in math, and each person was a dot on this continuum to the highest grade you could get and the highest score you could get on the SAT. Literally what you're doing when you do a regression is you're just saying, if I were to put every single student somewhere on this grid, wherever they go, and then draw a line down the middle of it, and then draw the standard deviations on either side of it. That's all we're doing when we do this. So what we're doing basically is we're dividing up what's going on into bite-sized chunks. So this right here is the real-time trade in ES with a 20-second bar. Okay, so this outer set is the one that's 80 periods. Remember, I put that up in the Slack. If you haven't seen it yet, it's the settings for the LRCs. So what it's doing is it's taking every trade for the last 80 periods, and it's plotting the 90, what? Anybody? What are we doing if we're doing 2 standard deviations? Okay, we're getting just about 96% of all the trades. And so what it's saying is that if you take this boundary and this boundary, and obviously it's changing real time because it's using the most recent 80 bars or 80 periods, and then 96% of every trade should fit through there or fit inside there. And there will be a few exceptions. You can see at the very top here, there's a couple that were outside the boundary, but those are the outliers. Those are the black swans, and those aren't really relevant to us. What's relevant to us is the collection of trades. And the other channel, this little one down here, is the exact same idea, but it's for a shorter period of time. It's for 20 instead of 80. And again, the idea is if I just take the last 20 bars, all the trades, what would be kind of the upper boundary and the lower boundary of the range they would fit into? Okay, so that's the thinking behind the math. And it's actually really simple if you don't overthink it. What we're trying to do here is we're trying to say, and again, there's no trend involved here. The word trend cannot be in your vocabulary. This is a capture of a range. If I take all of the trades, I want to see 96%, which is pretty close to all. I want to see 96% of the trades that happened in the last 20 bars or the last 80 bars. Show them to me by a range. What does that look like? And that is what this is right here. So let's blow it up and look at it. So the top of the range right now is right there. So call it 49. And it's never precise, by the way. That's why I don't have my LRCs paint markers on the prices here, because you don't ever want to be that precise. It's ish. You're doing a regression, and by definition, a regression is going to eliminate outliers, you know, those 0.3% that don't fit. So it's never going to be a precise calculation. It's a range. So that's the top of the range, that's the bottom of the range. And then this little one inside is kind of what I refer to as the range within the range. So what's happening right now? Well, we see the range has been steadily declining, and that's what I was referring to on the dome here as the cascade down. We go down, we try to come up, it gets sold. We go down, we try to come up, it gets sold. We go down, we try to come up, it gets sold. We go down, we try to come up, it gets sold. That is what I was pointing out to you on the dome with these high volume nodes that turned out to be really good entries for shorts. Or, you know, if you wanted to play counter trend, you know, you could try to be buying the attempts to bounce, but that's pretty silly in this kind of a movement, right? The bottom tool that I'm using here is just the delta. So you're seeing the bar by bar delta, and obviously it's overwhelmingly on the sell side right now. You know, the delta is simply the trades on the buy side versus the sell side, and that's what's being shown up here in pink or red. And the ones in green here are blue on this particular color scheme. And the same colors apply to these tapes you're seeing going by, although the different shades here actually have meaning, like, you know, if it's above or below, or if it's tick up or a tick down. I'm not going to go into that right now. I want to stay focused on our excursion from over here on the chart to getting to the dome. All right, I'm going to stop and take questions in a minute. I just want to make sure that we covered what we needed to cover here. Okay, so we're looking at ranges within ranges. Okay, a regression is nothing more than a way to put an upper and lower boundary on a group of trades and come out with a range. It does not imply a trend. Don't think this is implying a trend. Your brain's telling you there's a trend there. And yes, there's a trend in the prices, okay? But if you think that way, you will get caught on the wrong side of this every time that we start going counter trend, because it really isn't a trend, it's a range. And there's a lot of ways to trade a range. You can go with a range, you can counter trend a range, you can scale into a range, you can scale out of a range, and that's a completely different conversation, but it is not a trend. Very important. I'm gonna say that over and over again. Okay, so really important that you understand that what we're doing is we're capturing this metric right here, about 96% of the data, because all we're doing is thinking in bets. Remember the book, I mentioned it, it's in the Slack, Annie Duke's great poker and business and life and trading book is about thinking in bets. That's all we're doing here. We're this one right here, okay? We're just saying, how can we improve our odds of getting an entry right? Well, if 96% of the trades are going to go by in this range and 96% of the last 20 in this range, then it's going to be fairly significant if we're at one end of that range or the other, isn't it? Because we're either going to leave there and we've got a breakout event, which is kind of what we've been seeing as we go down, right? Or it's going to change. And where it does that, we'll be able to see that over here. And you'll see it on an LRC as it happens. If we get a turn here, it'll be pretty obvious. And I'll point out the details about it. I also want to mention that throughout this boot camp, I'm going to be posting hundreds of examples in the channel, the Bootcamp Chart to Dome channel. And I will explain them as I did up here as I was posting them. I encourage you to read everything I put up here, because you'll see as they shift, I will explain it. Like here's one right here. Note how prices turned exactly at the upper boundary of the LRC right there. That's not a coincidence. That's why we're using them, because the statistics told us that, look, it's going to turn there or it's going to keep going up. And it turned right on a dime. You had a perfect trade entry, whether you were scalping or you were looking for an intraday trade. Okay, let's stop and take questions and make sure this concept's just completely clear. So I'm going to look over here in the questions. Okay, Nate, if statistically 90% of the time we're going to be within that regression, could we not also say that all trades will be within a linear regression trial? Okay. What is this statement right here? What does that say, Nate? I'm actually waiting for you to answer in the text. I'm hoping you're still here. Is he still? You are. Okay. Okay. All charts are wrong. So if I want to construct an LRC that's different, that shows me a different range, I can. Okay. I don't use a 10-minute. Do you see a 10-minute chart in front of us? No, you don't. Okay. So what have I said about this over and over again? And I'm repeating it. I'm not just picking on you. I'm picking on you so everyone hears this point. When I brought up a 2-minute chart, does anyone see linear regression there? No, you don't. I could put it on there, or if I wanted to, heck, I could make this a 2-minute chart. And of course, by definition, I'll get a completely different range. And that's exactly why all charts are wrong. Okay? So the point is here, this is why, what am I doing? I am showing you a 15 or a 20-second chart. And I am telling you that if you use anything faster than, longer than that, if you go to a minute or 2 minutes or 5 minutes, it's useless. And that's my point. It's only useless in this kind of scenario because otherwise, of course, the linear regression would cover the whole day. Then what good is it? And that's exactly why stuff like VWAP is useless, because VWAP tells you the volume weighted average price for whatever interval you give it. Like right now, where's the VWAP? I've got it up here on the dome. It's dark blue. There it is. Okay, that's my VWAP at 43. Right now, we're trading up here at 76. That's useless information. You know, the furors that are out there telling you that there's going to be a reversion to the VWAP. The VWAP is a statistic. It's calculated based on what's happened in the past. It does not tell you what's going to happen in the future. So this is a really good lesson. And again, thank you for playing, Nate. You're a good sport. I'm not picking on you. I'm using your question to point out, and it was a very good question. That's why charts are useless. And if you look at the scale of my dome here, most trading days, this is a really good answer also for you. Most trading days, this dome on QHD, so from 87, right, up here's the top, to about 64, that would be 20 points, 25 points. That is a normal day. The range of a normal day in the ES is about 25 or 30 points. Lately, our normal day is 150 points. So that's why this works perfectly, because it constantly adapts to the real time. And look where that is, right? Okay, the top of this chart right now, Nate, is 45, okay, which is, gosh, I mean, that's so far from even being on our scale, right? And the bottom of it is 65, which is right down here. So, you know, we're only seeing a tiny, tiny little bit of it. And that's why we zoom in on these ultra fast time frames. And many, many, many traders and many of the students here and many of the Motleys and the workshop group people will tell you, they came in here with this idea that, oh, these time frames are just too fast for me. I can't trade that fast. I have to look at longer charts. And every single one of them will tell you that when they started doing this, they realized that they were completely wrong about that, and that those longer charts weren't helping, and that's the faster charts, which, if you have any training in math, is mathematically true. A trend is a useless piece of information across 5 minutes or 5 days. Where it is useful is right here, you know, the last 45 seconds, that's definitely a mathematical trend that's useful for me to make a buy-sell decision right now. And this is a really important point, and that's why I'm spending so much passionate time on it. Okay, great question from Joe Clark. Are different charts used in different markets? No, not for this. Because again, our purpose is to get from the chart to the dome. And if the market is really, really, really slow, like, you know, treasuries sometimes are, you might even want to use 5 seconds. And sometimes I do that because you're looking for the change in behavior, okay? So make a note of this. Amy, could you please type for me the 3 types of price action? I have arthritis, guys, and I'm an old fart. So there's 3 types of price action. There's price discovery, there's ebb and flow, and there's what we call here in TRG HMOMO, or just high momentum. And there's actually going to be a whole workshop on price action because it's that big a subject. But it's important for you guys to understand our topic here, to understand, what that's about also. Price discovery is the kind of stuff you've seen when we've had the limit moves and, and it's just literally screaming up and down, doing like this. And, that and all the bids and the asks disappear, or they get to be, 4 handles or 10 handles away from each other. That's what we call price discovery. And by auction definitions, that's traders trying to figure out where the buyers and sellers are going to agree. And that's a really dangerous thing to trade at all, at price discovery. It's really hard to trade, and most people that have any brains don't. We're seeing price discovery right now. Something crossed the tape, or we hit some stops or something. So now see how all the inside bids and asks disappeared. And now everybody's kind of taking a step back and saying, whoa, there was some big sweeps there. I mean, look at that drop. So we're going to let this settle down for a minute, and maybe somebody had a 500 lot they had to sell. Who knows? Something was on the news wire. Whatever caused it, we don't care. It's the response to it that we care about. So we want to see, as it leaves price discovery and goes back into kind of normal ebb and flow, did the behavior change? And if I go out, let's use 10 seconds here. The purpose, again, of these kind of really fast intervals and the LRCs on them is to look to see if the behavior is changing. Did somebody suddenly come in here and buy? No. So what happened there? That big sudden price discovery we got looks to me like they either found some stops or somebody had to liquidate a really big position, because we got swept all the way down from 74 to what, 68? 8-point sweep, that was probably somebody dropping 1,000 lot or something like that. So anyway, we're getting so much cool stuff today, but I truly apologize if it feels like I'm just giving you so much information, because there's just really a lot happening, and it's really fun and exciting. Trust me, you'll catch up. And these are great questions. That was a really good question. So even if this is, gold, okay, well, gold's not very active right now. Let's use oil. So this is back on, who asked me that? Joe. So Joe asked me, I can do the same thing over here for oil. There's oil going down. So, you could jump in short right there, and, you're looking to capture, whoa, that was quick. Anyway, so these moves are not happening outside of context. Actually at this moment right here, oil is testing its opening range low, its first hour low. So that's a really interesting spot. You could scalp that either way. You could buy that or sell that. And so, but the adjustment of the time frame, for me, it's going to be 5 to 90 seconds. And the purpose is not going to be to find something that fits my hypothesis. It's going to be to try to put what I'm seeing on the dome into very immediate context. Like, why are people buying down here? Well, it's pretty obvious. That's a really strong intraday low. If that gets sold, look out below. I mean, we have not been down there, and this is really aggressive downside volume. So, this is a really interesting spot if you're going to trade oil. We could blow down to 25 from here, and it looks like that's at least going to be an attempt. Who knows? But, the other side of the conversation here, if I go to 5 seconds in oil, and again, this is where you can really zoom in and understand what's actually happening. All right. That story is probably true based on 5 seconds, that somebody's liquidating. There was a big seller. We tried to bounce, and now we have big seller again. What would be a different story if big seller goes away and becomes big buyer? And again, I'm not referring to any one trader. I'm referring to just the collective selling that's going on. And the delta is just, look at this, 350 negative delta in oil is enormous. I mean, it doesn't trade that liquid at each level. So, if somebody dropped to 300, that could explain how we got from 28.55 down here. So that could explain that entire 20 ticks out of the volume area or the value area. By the way, on all of my domes, the value areas are the ones that are more highlighted. If you don't know what a value area is, you need to go look at the market profile books that are posted in Slack. I use the volume profile, which is kind of a volume summarized version of a market profile. It's not volume at time, it's just volume at price. whereas the market profile TPOs, if you're familiar with that, those are volume at price at time of day. And this is just collective through the whole session. So see what's happening right now. So oil, that was a great question you asked, because I keep the same kind of point of view, but you can see right here, this could be a really sweet spot to nibble long on oil. Or if it bounces at all and you see the sellers coming in, then you could just join them. There's a really sweet setup there. So, I hope that answers that question. And let me stick this back on ES. And then I'll go, these are all great questions, and I'm going to keep taking questions. And then we'll go back to the agenda after we've exhausted the questions. All right, so let me scoot back up here. Okay, Nate asked me about that. All right, Blink, great book to learn how to do this. Yes, it's mentioned by a few people in the chat. Okay, the sweeps and this volatility, how to interpret them. I just actually explained a few, Osman. A sweep usually occurs on the tape when a large trader needs to execute a trade and there isn't enough liquidity. So right now, if I needed to sell 200 or more in the ES, I would sweep us down by 8 ticks, because that's how much it would take to fill a couple hundred. See, these are the offers here. Look at the bids and look at the asks, all right? So, let's say right now at 67, I want to sell 200. The price would be 63 instantly. Do you understand that, Osman? Does that make sense? No, I'm not using developing value areas. I'm using real-time value areas. The only previous day metric I use is on my volume profiles. I break the sessions into 2. So, this is an example of what my volume profile chart looks like. This doesn't directly relate to this topic, but this is one of the contextual views of charts that I use. I reset my volume profiles here. This will be obvious in a second. Okay, so you can see the volume profiles relate. There's one for the overnight, and then when the session starts, which is right here, then I start a whole new profile. That's the only break that I make with respect to the past. And then this indicator is the previous session high and low. And I do use that on a 5-minute view for a setup that I'm not talking about in this workshop, but it is one of the ones in TRG. So there's more about it there. That would be the first hour high and low setup. Okay, let me scroll through some more questions here. And these are great questions, by the way. You guys, I'm really impressed how well you're all keeping up, and the questions are topical, and they're questions that are pertinent to what we're actually talking about. This is all really good. This bodes well for you all surviving this workshop. And there's 2 ways that you don't survive the workshop. One of them is you just get frustrated and go away because you're either too new to trading, or you don't want to really understand what goes on with price action. There will be at least a couple of you that'll go out and try to buy an indicator that tells you when to buy and sell instead of learning what we're doing here. And that's a step backwards, but some of you will do it. And then every now and then I actually literally have to toss someone out because they just don't stop arguing with me. So I don't expect either of those. Let's see, question. Okay. During price discovery, do I suspend LRC interpretation? Great question, Darren. And Darren is one of our motleys. And no, not at all, though. During price discovery, the linear regression channels get very precise. They become a certain way. And we're not in price discovery right now, but I think there was one yesterday that I posted, and I even posted as an example. I think. Let me just look real quick. If it's there, I'll point it out to you. It would be in the Bootcamp channel, and it would be one of the ones I put up earlier. What happens is they get parallel and going the same direction, and one inside the other very tight. That's what it looks like when we're in price discovery, or HMOMO in one direction or the other. And if it's really a wide range, it'll look like that. So there's a good example right there. So this was the 15-second on the reopen, Darren. And whoops, I made that a little too big. All right, so this is the open 5 high and the open 5 low, and this interval here is a 15-second interval. So look at these 15-second bars. I mean, that was price discovery right on the open, right off of one of the lock limits, and so the outer one will get really wide, and then you'll usually see the inner one. This was a little later, but if we were at this point in the chart, it would be inside of it and really, really parallel. So, and I'm going to show you lots of examples of that throughout the workshop. But that was a really good question. Let me see, I'm moving my way down the questions. So the one about instruments, no, same settings, but on all of them, I fool around between 5 seconds and 90 seconds. So I hope that makes sense. Yes, mathematically, the fastest is always the truest. And Nate, you asked that, and that's correct. And that's exactly why the misconception of, well, if I go to a 2-hour, that it'll be more accurate, and if I go to 2 months, it'll be even more accurate. Think about that from a mathematician's point of view. What that says is, the more data I include in my model, the more accurate it will be. No, what you've just done is you've tried to find a model that fits your hypothesis, and you keep going out in time until you get one that's big enough. But if I'm looking at the LRC, or not even the LRC, if I'm looking at a, let's not even watch them. Okay, so here I'm just gonna take them off, and let's see. Quick way to do stuff like that if you're a ninja person, by the way. I'll just show you a quick trick. I'm just gonna say this as a template, and it's called docsec index for seconds index. And then I will just remove these, and I'll do that just by clicking on them and then right clicking. Okay, now I have no LRCs. So now if I'm looking at this and I'm looking at the dome, tell me, the longer trend here is down. Okay, clearly this, if I included 4 hours, it's down. What's the trend that matters right now? Hint, it's green. It's called the fastest one. Why? Because we're not going down. We're going up, and not only are we going up, we're going up aggressively. So the trader that is saying, oh, it's a bounce up, it's a flag, it's a this, it's a pennant, it's a nonsense, 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 fill in. It doesn't matter what term you want. None of that will help you trade. What will help you trade right now is focusing on the fact that we are leaving the first hour high with aggressive buying. Do you want to short this? You would be insane to short this. Now, that may not mean, it could be a short in 30 seconds, but right now it's not, okay? Right now, it's a breakout long, and you should be thinking nothing else. That's what an order flow trader does. Now, when it gets to slow down, and it slows down in an area that it's been before, don't call it resistance, call it a potential inflection point, 95. Oh, wow, that's interesting. Remember when we were fading the cascade on the way down, the first area we did that in was 99, and the second area we did it in was 96, which happens to be this area right here. Hello. See what I mean? The support and the resistance, quote unquote, will show you where they are. They'll be natural. And so if I throw those LRCs back on, and by the way, this is a great exercise to teach yourself LRCs. Take them off, put them back, take them off, put them back. That's what they look like right at this very second. The big one is horizontal. It's parallel to itself. So we are either at a really, really serious point to reshort, and then you need to wait to see it actually happen, which now it might be. It wasn't when I first said it, right? Now you can see it. And that's why faster time frames are better, because I can catch that short right at the top of the big LRC. I mean, it nailed it, right? And you could have saw, all right, maybe you don't catch the very top, but you easily could have said, all right, a good short entry is 41.5, and you're profitable below that and you're stopped there. So that could be a way to play that. And again, if you look at that on the dome, it'll be really obvious. because the price levels will behave that way. Watch what happens with these LRCs as we trade away from this area. And let's put them back on 15 seconds. A general rule of thumb for the intraday is 15 seconds. 15 or 20 works pretty good. On a really slow day, 30 works a little better. All right, so now see, so now that short trade might be over if the bottom, if this holds right here, because what we did is we just handicapped that breakout move long. And now we're going to see if it's really a breakout move long, or if this starts to shift over, and if the slope of this starts to flatten out and join the slope of this one, then we can see that short trade is still, in fact, working really well, right off of that inflection point right there. So, I mean, it just doesn't get any better than that. It's not that you're not seeing trading signals. You're seeing literally your own private mathematician tell you when statistically the odds are good for you to take that trade. Does everybody get this? I'm going to look at the questions while I give you some time to answer in whether you're getting it or not. All LRC, it depends on your platform, Joe. Just make sure you're getting 2 either way from the mean. You know, so it's a total of 4. On Ninja, for example, on Ninja 7, you have to put it in as 2, and on Ninja 8, it says 4. So, you know, just figure it out and check it against mine. Cool, Kevin. Glad to hear that. I do not care about the slope, Joe. Yes, Joe Celeste. Hope I'm saying that right. Yes, they are in Slack, Michael Spillman. They're also in this presentation deck, which I will post. They are, I think. Oh, you know what? I put them in the Slack right before class. So if you go to the boot camp, they are, I know I did it. Where are they? There they are, right there. So that is them. That's the ones for Ninja 8. Okay, let's see. No, I don't care about slope. Somebody just asked me that privately again. Okay, for everybody, if there's 52 people here, there is no trend. There is no slope. The only thing that an LRC is telling us is the upper boundary of the range, the lower boundary of the range, the upper boundary of the faster range within the range, the lower boundary of the range within the range, which happens to be very close to the bigger one. That's significant. That's significant because you have 2 96% mathematical events coinciding real time on a very fast time frame. In other words, that cannot be a better signal to enter a trade or not. Now, I could literally point that out to you every day, and half of you would make money and half of you would lose money, and that's why we don't call trades here. I won't tell you, you know, we're buying 24/7 and we're selling. I'm going to teach you how to make your own decisions, and then you can take that knowledge anywhere. You know, heck, several of you will probably try to open your own educational websites and teach this stuff, and fine. You know, go for it. Just don't use any of my material. I have no problem with it. Just respect our copyrights. All right, let's see. Do tick charts work? Okay, Joe Drennan, based on everything I've said today, do you still have the question, do tick charts work? For example, a 3600 tick chart today. Do you still have that question? This is the question you posted. I'm gonna wait because I want to either address that or not. You do. Okay. I need to take a deep breath. Okay. All charts are wrong. Okay, Joe? So charts are useful for context. What would a 3600 tick chart show you? What context would that possibly give you about the trading right now that would be of any value? Here's 1,000 ticks. So you're saying a chart that is 3 times the length of this chart. Okay, so please clarify. And again, I'm not picking on you. I want to understand your question. So you're saying to me, if I made a chart that was 3 times bigger than this, okay, why wouldn't that be valuable in determining the range I want to trade right now? Well, the top of the range is 25.20. We're trading at 24.63. So that is literally 60 handles away from here. That's 3 average days trading away. The lower end of that is currently at 23.36. That is 120 handles away. So Joe, I'm asking you very specifically, and please, I'd like you to try to answer me if you can. Why would that possibly be relevant to what's happening today? You meant 100 tick. Okay. This is okay, now I think I might be getting to the root of what you're asking me. And this is why I do this. Okay, does everybody understand the ways that different charts work? Sometimes people don't, so you may or you may not, okay? But a tick chart shows ticks. A second chart shows seconds. A range chart shows ranges. And those are all different things. If you don't understand that, that's far more elementary than I can go into here, but I will give you a great link, which is Chart School over at stockcharts.com. And you can learn all different kinds of charts there. And you know, it's very important that you do that on your own. I literally can't waste any time explaining it because you're just, it's a very elementary question. So 100 tick charts means, Joe, that the interval would simply be in ticks or trades instead of minutes, which is exactly what, or seconds in this case. That's exactly what I don't want to see because I don't want to see it in ticks. I can see it in ticks as it's happening. I want those intervals of ticks to be categorized in some way that shows me if price levels are getting leaned on and pushed down or up. What you're doing is exactly what I want you not to do, which is try to figure out a way to do it on your own, okay? It will, yes, Lee, you know, in fact, Lee, can you please, I'm gonna unmute you and let you do that so I can take a breath here because I don't mean to be frustrated, but this is the tabula rasa thing, Joe. It's really important you don't know anything, okay? And I'm saying that with love, but that applies to everybody here. You literally don't know anything. It's not that you're stupid. It's that you've been taught something that's wrong, or you've read a book that was wrong, or you've read a book that was so oversimplified. Okay, so I'm going to pause there and let Lee talk, and I'm going to go refill my coffee. Lee, you're up.
Thanks, Jeff. Joe, you unleashed the genie. It's important for everyone to have an understanding of how different charts form, because a chart is just a representation of something happening over a period. Now, that period might relate to time. That's easy. We can understand the horizontal axis. It might relate to a range of prices. Well, that gives us very distorted candles because candles, bars, are always going to close and open at extremes. The volume that's in the candle, or the delta volume or ticks, the number of trades. These are all arbitrary. To my way of thinking, the only clocks that really matter, if we're looking at a chart, are the session, because there are defined sessions, the day. I like 30-minute bars because I trade off market profile structure, so I can zoom in to that structure using those divisions. But anything beyond that is arbitrary. So if it's arbitrary, it's wrong. The market does not know, nor does it care about the chart that we're looking at. So as soon as we distort our visual of the market, we're fooling ourselves. Just remember that, you know, aside from the open of the session, the close of the session, this collective market has no idea what your NinjaTrader screen is displaying. And you know, you can set it up with 8 reversal, 10 range, 5 minute, 4 minute, 3 minute. You know, well, let's be faster than the 5 minute. We'll look 3 minutes, we'll be 2 minutes ahead. No, you won't. You're just getting a view, and that view sometimes will show you something, sometimes it won't. Therefore, all charts are wrong, And what's important is that you're actually able to see the action that's going on. But for the purpose of this workshop, go with what Jeff's saying, because it's a proven method. I'll get back into my bottle now.
Thank you very much, Lee. Okay, I just posted something in the chat, guys. Kenneth, I understand what you're saying, and I actually do the same thing, ticks against time. But please do not post things like that in a session when we're doing it. Post those in Anything Goes group chat or post them in the Bootcamp channel as kind of supplementary things, because I don't want you confusing the people that are here to hear the way I am using it. That's the same reason I don't want to know anybody's using RSI or using MACD or anything else. Let's all stay on the way I am presenting the material. That doesn't mean that there aren't ways that you might interpret it that are useful. Thank you. I appreciate that. Okay. Let's see. Brent, when you get the IP between the two ranges in the LRC, is that a good trade entry? It depends on the conditions. You know, right now, we have basically a very strong move down, right? That's a 5-minute chart of what's happening right now, okay? So depending on the setup you're trading, and again, you're getting ahead of yourself. You're trying to just take an order flow interpretation technique and you're trying to cut and paste it without any background into a process for a setup in a playbook, and you're not there yet. For example, the first hour low and the first hour high are in play right now, okay? Those are these blue lines. At 57 or so is the high. We just blew through it to the downside, and the low is what? 57. 23.57, a whole 100 points down. So that's a really big range, and note that the volume profile on that range here is not real orderly. It's got a pretty well-defined top and bottom, but in the middle there's a lot of high volume nodes, okay? So we could easily bounce around in this entire range all day, but what's valuable right now is that upper and lower boundary of that range, and then what's happening right now within that range. And that's a setup question. It's not a how do I use LRCs in order flow question. And so if you look at the Slack, you'll see they're very organized around setups and platforms. So that is actually a conversation for this, setups, JM, which is me, Jeff Mayhem, first hour high and low. That is where that would be relevant, okay? And again, not a bad point or question. What I'm doing is just is directing people to where you'll find answers and where you can post questions and where you can interact with other students about those kinds of topics. And we'll steer you along the way, don't worry. But that's the value of our group. There's so much great material, and none of it's bullshit. None of it's furu stuff. You don't have to buy anybody's $5,000 magic black box indicator to use it. You know, you can do any of this stuff anywhere you want. It's all just really good basic price knowledge. But none of you are going to get it if you don't just abandon everything you think you know. Tabula rasa. You know, just forget anything. And, you know, and then if you're a reasonably experienced trader, like Kenneth's point, I'm finding this really useful with a 50 tick chart. Great, that's cool. But let's stay focused on using it over time for the purpose of the class. And then, you know, you guys can exchange how you're doing it and how it's different in Sierra and all that. That's what the Slack's about. And that's why it's such a valuable tool. Okay, let's see, what other questions do I have? So that was the answer. That was a very long answer to your question, Brent, but I hope it was useful. Yeah, the only TaskWorks space I have is this old one that I just used to see the big picture for all 6 of my markets for the day for Twitter and stuff like that. And that's all, you know, I have left in TOS. But I'll tell you what, if you're thinking, you know, I've got Thinkorswim, I'm going to trade there, you know, you can put that little time and sales thing they have. That's a consolidated tape, and it's worse than useless. The data it's giving you could have happened now, or it could happen 5 minutes ago, or 10 minutes ago, or 2 seconds ago. So you must be using a professional platform, one of them, to do this. Okay, we're getting to, what is it, 8, 10, 2, 9, okay, we're doing okay on time. let's get back on the agenda and make sure. So hopefully at this point, let me stop here and just, you can be honest. If you just don't get the statistical idea of what we're talking about, please say so, and I'll try to explain it in a way or two more. So if anybody's having trouble there, please, embarrass yourself and say so. Otherwise, at this point, we should all pretty much be understanding a few things. And I'm going to put this slide back up for a second, because all of these are really useful to learn any material we teach. But, which ones are particularly relevant? Markets and profile, thinking in bets, the art of learning, Moneyball, and Blink. Not necessarily in that order, but maybe. Okay, but I've read a couple thousand trading books, and I recommend many of them, but these are the ones that I think are really relevant in today's day and age. So that's an important point. I want to talk about the schedule just a little bit, because there was a lot of confusion this morning. Okay, the next session, this one's not over yet, but the next one, we have a lot more to do. The next one is 9:30 my time, that's Chicago, 11:30 New York, 12:30, whatever, convert to your own time. And the link to join that is up in the boot camp right now. I put it up. It's the last thing there. Okay? So please make sure you join, and I will put up at least one at a time there. The next one will always be there right when I'm starting the current one. So please register for that. Also, you'll notice about Slack that any channel that has something you haven't seen in it will highlight, like mine do. So if there's a new post here in Platforms SC, it will come up. And so that's a good way to stay caught up. There's also direct messages down here. That's how you can communicate with anyone else directly. Take some time and learn Slack. It's a really powerful tool to do this kind of workshop, and also just to do our group. It organizes material in great threads, and it's very easy to keep up, but you'll only get out of it what you put into it. And if you don't, do your homework and learn how it works, you won't keep up, and you'll just annoy the rest of us asking questions. And that is one way to get tossed out of this session, if you do that repeatedly. The first 500 or 600 times we let you go. It's the second. Okay, why track the delta? Great question. Okay, Joe, where's the library again? Let me answer that one first. Okay, the library is on the website. Can't miss it. As long as you've registered for the website, which you all should have done, you'll see member access, library. Can't miss it. Start with the setup workshop from the fall. Watch all 35 of those videos, and that will get you an enormous leg up, particularly if you're a relatively new trader. Okay, the question was, why are we tracking delta on a 15-minute bar? And the reason we are doing that is because we are trying to get a sense of the delta that's going on the dome. And remember, I don't use the chart at all in my real life. This is how I learned to trade over here. And the delta is appearing right here. So these are real-time, what are called current deltas on the sell side. These are on the buy side. And then the ones that are accumulating in the middle of those two are what Jigsaw calls the total trades. So recent trades, current trades is the language. I think recent is what Sierra uses. And then these are the totals. And then these are the volume profile totals at that price. And those don't get reset. So what I'm doing is I'm finding a way to categorize each one of these bars into a bite-sized chunk, again, that's relevant to the kind of action I'm seeing on the dome. And if it's really fast, I might go faster because I want to see every 5 seconds, who's buying and selling. The trouble with getting in and seeing the trees at that level of intensity, Joseph, is that you often will miss the forest. Like right now, it looks like an overwhelming amount of selling, but I might miss a really good buying entry if I do that or not, and sometimes just taking a gander the other direction will give you a more consolidated view of the delta. And that's also helpful. And that's the reason I also run the other interval on my screens that are on the side. So see, this is a much more informative picture. When there was buying, it looked like that. We had a lot of selling, a couple of attempts to buy that are relevant. We just had one, and so far that one hasn't failed yet. This is not evident on a 5, 10, 15-second chart that that drop is getting bought. You'll miss the point if you're looking at it on a view that's too fast. So that's why. I hope I answered your question. No, it's not a delta of volume. It's a delta of every single trade, tick by tick. So it calculates the volume delta. So, you know, if it's saying 300, yes, that's 300 on the buy side, but it's the net. That's what delta means. Delta means difference in math. So at any given moment for that 5 seconds, it's the net. But what I'm seeing on the dome here is the actual trade by trade delta-ing, okay, for lack of a word. And that's what the tape's showing us here. I've got it filtered down to 12 or more, but if I put this down to 1 or more, you'll literally see every single ES trade go by and where it went by. So, you know, reds and purples are going by on the sell side or below the sell side. That's actually one of the parameters. The ones on the blues and greens are going by on the bid, excuse me, on the buy side or the ask. And so what I do is I run a meter that summarizes everything here because that's too hard to watch. It's too fast. That's what this meter does. And then what I do is I take it up and I just show me the ones that are 10 or more because that'll give me an idea where blocks are going off. Because some price levels you'll see a lot more blocks than others, and that's indicative of bigger players. You know, if I'm a 1-lot trader, I'm not buying 10s. 10s are probably in this kind of market a 100-lot trader. So if he's doing 10 at a time. So you can see what side those guys are on. They're not always right or wrong, but you don't want to be on the opposite side as them because you're going to get swept if you are. So, you know, again, this is all stuff that we're going to talk about, and some of it's beyond the scope of this workshop. It's more about tape reading, and that's why I do the live sessions. And guess what? I'm going to do more of those. And guess what? If you look in the library, you will see, I don't know, there's probably 30 of those already and growing all the time. So, you know, again, I'm not trying to do a sales pitch. I'm just trying to tell you guys that there's so much material you can take advantage of. If you do nothing between now and Thursday and go watch stuff we've done in the past, it'll probably answer 90% of your questions and get you that much more comfortable. You know, just anytime you see the word live tape, that's me literally explaining what's happening real time, just like I was just doing here, in many, many different ways. You know, you're going to realize right away one of two things. And this is directed at all of you. And well, you're going to realize a few things. Number one, we're really straightforward and honest. This is totally a no bullshit zone. So in that spirit, number one, we're ridiculously underpriced at $99 a month plus 49 bucks to do the boot camp. There's so much awesome. I mean, this could be $1,000 a month. And so if you're one of the new people that's furu hunting, or if you come from the world of, you know, I can make money in the markets if I buy a $500 or $5,000, you know, magic box from E-Mini Vinny or whatever, you know, the faster you can get away from that and understand what's reality. And there's a really good video in the workshop called Delusions where I talk about that stuff. The better off you will be. And then either you're going to end up in the second group and realize that this is just a phenomenal opportunity for everybody, myself included, because I have to teach it and that makes me better at it. But we're just a really good deal. And if you're one of the people still looking for magic, then I would encourage you to do one of two things very quickly. Watch the videos and realize the value of the approach we're taking. And if you don't understand that, use up your 1 month and go elsewhere, because we will never be that. We will never be that BS, you know, okay, everybody's going to buy 24.46. Your stop should be 3 ticks and we're looking for 24.56. That's Jeff's furu voice. That's my bullshit voice. You know, anywhere you go that does that is nonsense. You know, if they're doing that, they don't know how to trade, and they never have. They're selling you packaged crap that anybody else could sell you. And you know, that's a really important concept to understand, and that's why I'm emphasizing it. And that's really what, you know, we're talking about here when we say this stuff right here. if you keep going back in your head to this kind of thinking that there's some sort of indicator that if you zoom out far enough or zoom out at the right interval, you're going to get the right indicator to tell you the right perfect place to buy or sell. It just doesn't work like that. The right answer is going to be like, look at the LRC right now. Look at this 20-second LRC, which by the way is my default. Oh, I wanted to show you guys something else. So this is what my trading platform looks like. When I'm normally trading, I'm watching those markets on all those domes. I don't look at charts, but real quickly, I want to just show you guys what's on my left and right-hand sides. So give me a second to find the magic zoom toolbar that disappears all the time. There it is. Okay, and I'm going to stop the share for a second. Okay, this is my left-hand screen, guys. Can everybody see ES with 6 charts and NQ? Good. Okay. Yeah. I will say publicly and let him come and bring it to me that E-mini Vinny is the biggest criminal in the business. Complete and total bullshit. And if you know him, if you've paid him, or if you think he's accurate, bring it to me privately. That is just the worst part of our business, are just fools like that. And, I hope you hear my passion, and ask any legitimate trader. Because if you ask, one of our members said he met a trader in a bar in Russia or Austria or someplace, and they were talking about trading, and this was a guy who had experience, market maker type guy, and our student asked him, what's the most important thing in trading? And he said, your process. And that is absolutely and completely 100% true. Nothing else matters. Oh, I've invited those guys over and over again. They don't want to hear reality because it ruins their, I can get 10,000 people to give me $49 a month trading room, pitch. That's why we don't, those guys will never come to real world because they don't make any money. They're selling bullshit. Bullshit sells. People don't want to hear what I am saying to all of you today. They want to be told that you can send me $5,000 and I will give you a package of tools that will make you $5,000 a month in the market. And believe it or not, there's people that are delusional enough to believe that that's true. And that's in the Delusions Workshop session. And I won't emphasize it anymore. But I do get passionate every now and then. It's kind of fun if you just let me go. Okay, I want to mention one or two other things about some of the questions here. Thank you, Kenneth. That is great feedback. Do I ignore the heat map from Jigsaw? Great question. Let me just finish on my charts here. And I will, yes, Gary Norden nails it. It's trading porn. Okay, so this is what is on my left and right. So on my left is this for the ES and NQ, and on the right, it's identical for oil and gold. But I don't look at that. I look at the one in the middle, which is the other share that we started on and we're going back to. It's this one. So those kind of views are always kind of out of the corner of my eye. So I just wanted you guys to understand that. I normally do not keep a chart, up here like I was doing with this one. That's there for your benefit, not mine. I don't use the LRCs anymore. I just keep putting them back on for these workshops. They're not useful. They're really useful. Here's the long-term answer, and think about this. I'm going to stop and say, everyone who's not listening to me babble, listen to this next point. This is a docism, and I have docisms every now and then, and they're really important when I say them, even to me. The trouble with leaving the LRCs on your charts in the longer run is they will trick your brain into thinking there's a trend when there isn't. There's no uptrend right now. Right now, we see a stops run or something in news or a press conference or something. There's no uptrend here. This might be a very good place to be long, but if it were me, I would be scalping this short because I would be making money on a bunch of shorts. I would not, there's another one. I just did it 4 times in a row. Do you get my point here? Okay, I would just be looking to scalp this short because it was that was a reaction that happened. It might continue, but it's overwhelming odds it won't, okay? So I just showed you how you trade a sudden sharp move like that. I just did a whole bunch of 1 and 2 tick winners. So that's an example of how you do tick drills, but Those weren't drills. That's how you do it. Okay, so that's how IPs work. Exactly. You know, once you learn to feel that, and you learn that, look, if that doesn't go down right there, or at least for a scalp, then it's going to go up really aggressively, and just be prepared to reverse your trade. You know, you can probably get one going the other way. You know, I'm just screwing around now. I don't really care if this works or it doesn't, but let's watch the tape and see if we can figure this out. This still looks like a short to me, but let's play a rookie long trade and average into it and see if we can salvage it with an averaging. I bet we won't be able to, but I'll try. Okay, well, it's coming back, but not fast enough. See, the delta is still negative. It's still getting sold. So unless it can break through that area where we, you know, went with the stupid people and got long, you know, it's going to have to come up through here really aggressively, and then we might get lucky and get out. Having averaged into a loser, all things you shouldn't do. Boom, we got it. All right, I have the skill to do that. I have the experience to know where to add to them, where to say uncle, and say it's not working. Don't try to do what I just did, but definitely go in and watch it and learn from my examples. When we trade live, I will do that like I just did, but I will do it hundreds of times, and I will do it like this, looking to fade either end of a range that we have, because the action's not right here. It's going to be if we get at either end. If we get up here again, that's an interesting short. We might just get filled on it. Let's see if we can get one there. And then conversely, if we came back down here into the 50 area, which is way down there, by the way, you know, it's like down here, then that might be an interesting other end of the range. There we go. Okay. So we got filled on that one, and we're now upside down short. So let's see what happens. Let's see if we can make that guy work. Okay, there's first one. And I bet it probably, let me watch the action. I'll tell you whether I think this is going to work or not. Yeah, I think we'll probably get filled here, but it'll be close. We'll have to take a pretty good sized drawdown to make it work. You know, something like $500 or $600. And boom, we got one. Can we get the other one? And we got the other ones. So how did I know that? How could I possibly have done that? Looked at that and said, yeah, that short will work when it's upside down by 8 ticks. How could I possibly do that? Am I a genius? No. Am I smart? Yeah, but that's not the point. Have I done this before? Yes. So what am I doing when I do that? I am doing something called a blank. A blank is where you take experience, having seen something so many times, and you've taught your brain over and over again that here's the way to respond to that. You need to learn to do it without thinking. That's what a blank is about. Without thinking. You just got to teach yourself how to do it. And that's what this class is about. And that, ladies and gentlemen, is exactly where we were going to stop, other than for questions. Perfect amount of time. We nailed it. 96 minutes. I was shooting for 90. All right, next session's Thursday. Now I will take all and any Q&A, and anything Amy might have seen that I missed, please send to me privately, Amy, and also Lee, I think you're still here. Anything you want to add? You know, Lee's a former proprietary trader. He and I both developed code, which is not the same thing as what E-Mini Vinny does with his black box. He sells bullshit. We develop code. We develop tools that help us. And there are ways to build little bots that'll execute trades like that. I have a little bot that I use when it's quiet called, it's just an ATM for scalping ticks. And, you know, it just looks like that. I just used it. It gives me a 1 tick target and an 8 tick stop. The trouble with it when we're real volatile is that 8 tick stop is too tight. So there it is again. And boom, that time I got stopped out, but I still would have taken that trade. That's why I don't use that when we're volatile. Instead, I use a different construction, and I use more discretion. This is not my stop. That's catastrophic if the event that I get disconnected or something. what I just showed you, then I decide where to put my target and I pop it in there and I get filled and I make $37. That's what we call in TRG picking up $20 bills or picking up $50 bills. You'll see that expression. It's just going in and hopping on scalps in the tape. And you can do those with 5 lots too. You could do them with 10 lots. It doesn't matter. The math scales based on the instrument you're using. I wouldn't try to do it with a 10 lot in NQ, but you could easily do a 10 right now in this market with this liquidity in ES. Over in NQ, I'd probably do it with blocks of 2s. And why? Well, look at the offers and look at the bids. If you go in with too much, you'll be a sweep. You don't want to do that. So you do need to adapt if you're going to play that game. Oil tends to have pretty solid inside bid and ask. And gold tends to be more loose, particularly this time of the day. We tend to have real loose inside, and then we get a player like that and a player like that. And so that's the way I'll trade that. If I'm working a range, you want to wait for it to come to you. You don't want to try to jump on momentum, because by the time you get there, it's over. It's another Jeff Docism to write down. Never try to jump on a move using fear of missing out. That's why the guys that bought this pop up here, this big green bar, got stopped out. Immediately it came down, because there's always some group of idiots that will jump on a high momentum move, and they're always a day late and $1 short, because none of them know how to read order flow. If they read order flow, they would be the guys taking profits on their longs. In other words, selling to those retail newbies. And by the way, that's the vast majority of you here listening to me. And it wasn't that long ago that was me. I mean, I know better, but for a long time, I didn't have the skill to execute better. And that's what we're talking about teaching you here. And this is our first step in doing that, is learning how to understand these ranges. So your homework assignment, while I'm looking for more questions, will be the following. I need you guys to practice looking at LRCs. You don't need a dome to do it, but if you have one, it's useful. And I want you to just put up a 15-second or a 20-second chart with these 2 LRCs on it, and just compare it to whatever market, whatever instrument it is, and just watch it. The NQ is always fun, because it just moves so much. Or the minis, the micros rather, if you want to actually try trading it, or whatever. Here's the NQ. Oh, all right, perfect example of what a trend looks like on an LRC. You will see one inside the other. When you see that, just think about the math. The range within the range is moving up. So the longer term range is moving up, the faster range within it is moving up. This boundary right here is very likely to get broken to the upside because of the energy. That doesn't mean it will, but that will be a really significant IP. Not to mention, it's been one before during the day. So I would be watching that spot right there, 73.80, looking to see if there's a ton of buyers that come in, then we will blast right through it, and I want to be long there. You could even put a buy stop long there, that would work. Whoops, we don't want to sell it, we want to buy it. So that would be one way of playing that kind of. So that is a setup tactic operating against what I'm seeing in my LRC and on the dome. Do you understand the difference? One is just what's the action? And this is a useful document that's also in the Slack that I haven't mentioned yet. This document right here under Process Masters. This is a little 10 steps thing I did for the boot camp to find just consistency. And the idea here is that you look for the setup based on what's going on in the market. You do that part first. And then, you go look at your tools. So that's the answer to your question about, where the delta is relevant and how you use it. If I'm watching a point like that and I just see it overwhelmingly getting sold, then then what's happened right here and what happened here is likely to happen again. So you literally can just watch the order flow and see what happens. I mean, it's that simple. Now, this is a case where going out a little bit on the time frame can be useful, because you can kind of look ahead, but don't ever think of that as resistance or support. It just doesn't work like that. Look at it as a potential inflection point. Okay, let me look at some of the comments to me. Okay, Amy. Okay, Amy clarified something to me, and I think it's a good point about using time versus using ticks in these very fast LRCs and charts. And I think it makes a very good point. So let me just go out to it. Here's the reason why I think using ticks is going to mislead you. This is time. And what we're trying to understand, remember, is the range, and the range against an interval of very fast time. You know, whether it's 5 seconds or it's 10 seconds, because we want to see the behavior at the extremes of the range, right? Everybody following me on that? So this is why I kind of jumped out at Kenneth about the ticks comment, because there's nothing wrong with using ticks, but if you switch to ticks, and let's make it a fast one. For example, let's say I use ticks and I use 100, or actually on ES, a better comparison would be something like 50 ticks or even 20 ticks. That would be closer to the right. What's going to happen, because they're ticks and they're not time-based, they're going to smooth out the action, and that's exactly what I don't want them to do. Kenneth, do you understand now why I came on so strong about that? You don't want it to smooth out the action on your behalf, because the dome's doing that for you already. Yes, what you said in your comment is useful. I used to run a tick right above, so I ran 20 ticks in ES, and then right next to it, I would run 15 seconds or 20 seconds. That can be handy, because if you don't know how to read the dome, that allows you to compare action to time. And that's a valid comparison. And that was the point that Kenneth was making, that I said, let's not get distracted. But you can see how the timing one is more important for what we're trying to do right now. The ones that are using intervals of time, because what's happening by putting it on ticks, you're already kind of, not a math term, but you're already regressioning it. Did you understand my meaning there? Okay, you're taking away the sense of the range. See, the regression of 50 ticks is very different than the regression of 15 seconds. Do you understand that? And Amy, did I answer your point for everybody? And Kenneth, that's actually the reason why I asked you not to do it. But now it turns out to be a really good example for everybody, so I'm glad you asked it. And you were being helpful. It's absolutely, it's a really interesting point, isn't it? I mean, if you're just looking at ticks, you don't realize your brain is getting deceived into that. It's already doing the range for you. I mean, I could go down to 20 ticks. I do it sometimes, or even 10 ticks. And the problem is ticks, by definition, that's already taking time out of the equation. So it's always going to mislead you. And, that's the beauty of charting. And that's why there's so many chart types. You can literally construct a chart that does anything. I mean, you can prove any point you want. And that's why Furus make so much money selling bullshit on Twitter. Because, a guy like V-Mini can, E-Mini Vinny, he can post, how great his results are and back test it for years. And by the way, back testing is another piece of complete and total bullshit. There's no such thing as back testing. It's absolutely and totally useless. The only type of testing that is useful is trading real time in the market with either a really good sim or real money. Anything else is a waste of time. You can prove a concept to yourself by looking at it in the past, but if you think you can prove statistics to yourself by looking at the past, not only are you wrong, but mathematically and from a trading point of view, but the amount of time that people spend back testing and posting back test results is just mind-numbing to me. I mean, it literally is meaningless. So that's another very important point. You can't duplicate enough conditions going back. There's literally thousands of variables at any given second as to what's going to happen. And there's no way your back test can possibly integrate all of the variables. It's just not possible. And if you think about it, the algorithms, if anybody was going to be able to do it, some of the really crazy algorithms out there are the ones that game technical analysis, and there's a bunch of them. All those guys had to do was sit down and say, okay, what are all the common, indicators, and just throw them all in a big batch and program code that every time we get to one of those, just trade the other side of the tape a couple of ticks until it's no longer true. And there are algorithms that do exactly that. Okay, more questions. I will take more questions, and then we'll be done. Oh, the heat map. Okay. Yeah, the heat map is something that Jigsaw has and Bootcamp has and a lot of platforms have. It's this thing, the liquidity maps. That's what everyone is referring to when they're talking about heat maps. Kind of this idea of you can see where all the buying and selling took place, and you can see where the bids and the asks are. Okay, those kind of things. That's a heat map. I'm just trying to get this to be even useful in terms of interval here. I've got to really zoom out to make it work. Okay, so that's what they're referring to, and that's what Bootcamp does. And a lot of platforms rely on this kind of view like that. Where the bids and the asks are, and spread it out just a bit. Anyway, so the question was, do I use that? The answer is no, because it's more about where orders are. And as I said earlier, I don't really care where orders are. I'm more concerned, I can see them on here. I don't care that there was a cluster of orders there an hour ago or anything like that. For the type of trading I do, where a trade is a scalp until it proves otherwise, that's a meaningless piece of information. So there's absolutely no value to it. Okay, let's see. More questions. Let's see. Okay. I don't see any other new questions. Did I miss any? Yeah, Brent, your question about whether an entry between ranges or anything to do with IPs, let's not talk about trade setups at all with respect to IPs yet, because you'd have to have a good understanding of my playbook for that to even make sense. And some people here understand the playbook, some don't. And I'm in the process of republishing a simple version of it, and Lee's doing his as well. So let's just stay off of trade setups and just focus on learning what the LRCs are actually showing us. And we'll be a lot better off. Okay, looking for more questions. Yeah, I appreciate it, Kenneth. I agree. That was helpful. I wasn't bragging on you. I was just going back to that as an example of, sometimes the process of teaching it creates an opportunity. And, that was a perfect example of, why don't ticks work well under that circumstance? And again, it's also a really perfect example for those of you that are not as chart type savvy and are relatively new. This is just one golden nugget of knowledge we're giving you after another. So you really, 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 really need to come back and listen to these things again and understand, why I said what I said, and why are tick charts not valuable, and what is a tick chart, and what's a range chart, and why does that not matter? If you're using any of those tools, and this kind of goes back to the, people that had trouble finding where the boot camp was, for example. Everything is in our Slack, and that's why we posted this admonition to you guys, because this is reality. Again, we're honest. And I said something about, this comment that Amy made, and this comment that we made back here where I posted the registrations information. Everybody's really focused on their own learning here, and they will do everything they can to help you. But if you're repeatedly the guy that, doesn't read the email and doesn't click on the links that are posted 4 times, hasn't been to the Slack channel, hasn't even registered in Slack, then we're not going to have any sympathy for you at all. I mean, we're literally going to ask you to leave. So, please take advantage of what's there. The Slack is just full of stuff. Familiarize yourself with it. Cool. Okay. Yeah, we barely have sympathy as it is. That's true. I got to tell you, Amy's being honest, Lee's being honest, I'm being honest. We don't have a lot of sympathy for people that want their hands held, because this is a business. You're here going against very professional people that will just take you to the cleaners and take your money. And that's why 99% of all futures traders lose money, because they don't, take seriously enough that this is a business and you have to treat it like that. And if you're coming into a new business, you wouldn't open a shop making custom furniture out of walnut, having never used a table saw before. And that is very analogous to what we're doing. You need to learn the language, the tools. You need to do that before you even understand the material, And we don't say that because we're trying to sell you more memberships or anything. Everything you need's here and it's already included. You've already paid for it. But if you don't avail yourself of it, it's your fault. That's the point. Okay. Questions. At the end of every session, I will make the following statement. If anyone has a burning desire, that is your ability to ask anything. It can even be one of the stupid questions like, do we use tick charts? You may do whatever you want. I will answer anything. And as a result of the questions that I see, we will end the session. So we have covered our material. We accomplished what I wanted to today. Let me review that real quickly, while those of you that have any extra last minute burning questions can post them. I wanted to make sure that, and this is my admonition right here. This is what I was talking about. This is what's expected of you in this group. If you can't do this, please go elsewhere. I'm saying that honesty and love. We don't want your $99 a month. However, we would really like you to stay with us and learn from us. But if you can't do these things, then, I'm going to get angry at you and cuss at you and toss you out. That's just the reality. Okay. So back to our assumptions. Again, I will post this deck, but I really want you guys to review this stuff over and over again. I want you to understand the idea of it's very simple statistics. It's just like the way you got graded in school. The C scores are the means. The A's are up at the top. The B's are between the C's and the A's. The D's are between the C's and the F's are down here. Can you get worse than an F? Yeah, you can get evicted from the class. And that doesn't happen very often, but when it does, it's significant. And we call that a black swan event. Any event that is more than 2 standard deviations or 2 sigma away from the mean or the middle, roughly. Okay, start reading the books. They will be of amazing value to you. I cannot emphasize that enough. Our next meeting is Thursday at 9:30. It's a half an hour later, although I will always be a few minutes early. I may do live between now and then. I will do lots of live in that session, assuming we are not halted. When should we get a dome for the next class is the question. You don't need a dome for the next class. You can get a dome anytime you like. You do not need a dome for this class. However, if you want to learn and practice what I'm doing on your own computer, you should either get Jigsaw or hook up Sierra or whatever platform you're on. There is a link for affiliates for us in the Jigsaw thread. It's right at the top. And it's also pinned. You can just go over to this. See this button right here? That's where pinned stuff is. And if you click on that, it will pop up. The manual for Jigsaw is there, and the affiliate link is there. The affiliate link will give us a little kickback to TRG, and that is one way that we keep prices low. That doesn't go into Lee's pocket or my pocket. That's how we help fund the group. So please, if you're going to do that, use our affiliate links. And yes, there's a layout for SC. It's, guess what? In the SC channel. And Lee can help you more with that. In fact, Lee, why don't you hop in here while we're doing this? And I'm going to point to that. It's right there. So that's the answer for Andre. Is SC better than Jigsaw? We are platform agnostic. That means we use the ones we like. The true answer to your question, Jack Croft, is that you should be a master of several platforms, because every now and then somebody goes out of business. And if you're the guy on Market Delta in 2014 when they went under, you were screwed. That could happen with Sierra Chart, it could happen with Ninja, it could happen with Jigsaw, it could happen with anybody. You want to learn the material, you do not want to marry platforms. Which one is better on machine resources? The best one for machine resources, Lee, I hear you breathing. Don't worry, we'll let you in a minute. Is a totally stripped down Ninja with Jigsaw running only day trader. That has absolutely the lowest requirements of anything. The next one up from there would be a Sierra chart implementation, because NinjaTrader itself with charts is pretty fat. Hop on in here and talk, Lee.
I disagree with that, Jeff, but
have you ever used, okay, I'm going to stop for a second. If you take Ninja, no charts whatsoever.
Okay, yeah,
Only
Ninja
thing you
with no
use it
charts.
for is the market and analyzer to link it to DayTrader. You are
Yes.
running nothing but that, and then you're running in DayTrader. That you can do that with 500K, I'm not kidding, and you could do it on a computer running an i3, and it runs fine.
Yeah, agreed. Ninja with no charts is like, as soon as you open charts, I think it's a pig.
That's true, but you shouldn't be using any charts. Okay.
In terms of the chart book, so I've thrown up a sort of play along chart book for Sierra chart that gets you well along the path with the LRCs. It's got a dome that looks pretty much like Jeff's jigsaw. It's got a power meter in there. This is to save you time and give you a starting point. I'm not Sierra chart tech support. I know the platform really well, but please don't come back and say, how do I move this from here to here? How do I change the color? They've got brilliant documentation, but this is to save you 30 minutes of assembling something so that you can get more out of this bootcamp as we go along.
Great comment. Let me show the folks for Jigsaw. The same thing is true. If you go to the platform Jigsaw, you'll see I've saved the templates there. There is that set of domes. There's my Jigsaw templates. The stuff is all there. Every time I update it, here's different ones for different instruments that use different colors. Literally everything is shared in those places. Same thing for NinjaTrader. It's done there. So everything that you need to be able to do is in the Slack, but please, please, please understand, everybody. Don't ask us, okay, I saw what you posted there. Now, how do I do this? We are not here for that. Okay, we just can't do that. There's too many people, and you have too many different types of computers and platforms and setups. Feel free to try to help each other. We post the links to support, but understand we just can't do that all day long and answer one-on-one questions on platforms, and we will not do that. We will answer questions on, the specifics of the things we are teaching, however. That's why we're here. Okay. Any other comments, or Lee, do you have any other wrap-up stuff? Can Lee show where to get his platforming again? Lee, can you put in the chat your link to the emoji?
What's Mike referring to in terms of his platform?
Yeah, are you talking about the template, or are you talking about Ninja itself, or Sierra itself, Mike? Okay, well, the template. Okay, it's in the Slack. You know what? I'm gonna play angry for just a second. Everything is in the Slack, guys. Seriously, there's nothing that's not in the Slack except the videos, which are in the library. That's always the answer to that question. Where is X? Doesn't matter what comes after is. The answer is the Slack. Okay, and then the videos are right here in the library. And guess what? If you go to videos in the Slack, there's a link to the library. So we've thought of everything. Okay, the Slack is where everything is. The guys in the Motley crew, some of the people who've been around for a while, Amy, who's our teaching assistant, those are good people to reach out for if you're getting lost in the Slack. And what you do is you just, any channel you're in, or just, ask a question, just type an @ symbol, and then a list of people's names will come up. So I can say, @Amy, hi, Amy, and it will go right to her. This is a really powerful tool, Slack. But if you guys don't learn it, it's going to be useless for you. And we will only hold your hand for a very short period of time teaching you Slack. We will hold your hand teaching you linear regression channels. We will not hold your hand teaching you Slack. Thank you, Jim, and thank you for participating the way you did. I picked on you, and you stuck around, and you're going to be one of my best students, I can tell. And by the way, that's why we ask you to use your real names, not Trader 203715 or Super Trader. Use your names and do it in the Slack, unless I already know you or you're the only one. Raj is the only Raj right now. That's perfect. Ferv, we all know Ferv. We all know, but please, that way I can learn about you. I can go read about you in introducing yourself. where a lot of people, if you haven't done that, go to introduce yourself and do so. Why would you want to do that? Because I am your college professor, guys. If I don't know who you are and what you already know, how can I possibly teach you? That is why I am not E-mini Vinny. I am concerned not about me and my bank account. I'm concerned with you and your learning. If you don't avail yourself of the features here for me to do that, then you're only hurting yourself. Okay? That was a great tick question. I'm glad you asked it too. All right, let's see. That could be. I think there's 4 or 5 people that are actually older than me. I am 60, and I think we have one in his 70s and a couple of other 60s. But I'll bet I can run a marathon faster than everybody here. So there. And I'm 60, 76. Bless your heart, Joe. Where do you live? What state do you live in? New Hampshire. Okay, cool. Hey, be safe. Everybody from my age on up is, a lot of danger with this virus stuff. So we have the perfect opportunity for you to stay home and make money and learn. And, and there's, thank you, Robert. Welcome, all of you. There's a bunch more old farts. Now, having said that, we also have a really smart 20-year-old here. Everybody has already met David Tomas, and everything in the middle. And on top of that, Maria, who just posted there, she doesn't run. Maria's a stay-at-home mom with young kids. She does this, with like one baby under one arm while she's packing them off to school and makes money doing it. She is also a motley from the workshop. So the rest of you, these are all the people to avail yourself of. Let me just point out a few others. We've already introduced you to Amy. Let's see, Darren was chatting earlier. He's here. Darren is a pharmacist and a really smart analytical guy who writes really well, particularly writes self-critically really well. Read his posts in the Anything Goes chat and the Ask a Question chat. You will learn from it. Every one of the motleys, Bar is a good example. Darren, David, Dimitri, Ernesto, Ferv. I'm just going down the list. Kavika, Kevin, Maria. These are all people that are posting their results. They're literally saying, I fucked up today, everybody. Look at this. And they're sticking it out there in front of you. That's the kind of stuff you'll see in Anything Goes group chat. And you can learn so much from this. This is real. This is not BS. And people will ask questions and people will post. That's what this process shares is about. People will come in and post their own versions of my process. This is David's. This is the kind of stuff you need to be working on. So avail yourself of all of these crazy resources we have. Because they're just, there's nothing else like it. I really don't think there is. Okay, I train with weights while I'm trading, Robert. That's how I keep and I also wear a heart rate monitor so I can see if I'm stressed. Those are really good things to do. I used to, as I pointed out in the first session, I have, I'll show it to you again in a much bigger version. Oh, let's see, hang on one second. Oh, one second. There it is. Okay. Okay. Really? Sorry, I'm having trouble with my network right now because my fingers aren't working. Oh, that should be up here. Oh, well, what I was trying to show you was that picture I had in the first deck, but I can probably get to the first deck faster. So I'll just do that. Yeah, this one, I just don't, the blow up of it, this one in the middle here, what I was trying to do was whoops. That's weird. I'm making it bigger and zoom is unzooming it. All right. So this picture right here, back in the day, I was on that treadmill or that cross trainer when 9/11 happened. I don't know if you heard that in the first session. I was short and had a position on, and that's where I was 9/11. So I've always had this idea that one of the great things to do is have some dumbbells next to your desk and, have one of those little foot treadmills under your desk. That's a great way to exercise and also to keep yourself from getting high adrenaline content in your small trampoline, another good one. Okay, anyway, I'm going to wrap it up. Yes, my avatar is Max Headroom. Good. You got to be at least our age to know who that is. Awesome. You coach basketball. We have to all talk more, and we will do that. My brother-in-law coaches basketball, and he has a charity. In fact, this is a really good chance for me to promote a charity, and whenever I get a chance to do that, I will. My brother-in-law is a guy named Rich Singer, and he's the basketball coach at a private high school in Santa Monica called Crossroads, and it's one of them there. And he also has a charity called Soul Brothers, and they donate sneakers to kids that can't afford them. Please follow this charity and join it. It is a wonderful, wonderful thing. Kids that live in the hood that cannot afford Jordans or don't want to get killed for wearing them, that's what this is about. Getting, workable sneakers to kids that, want to play ball. So really, really cool. So whoever was an ex-basketball coach, this is a great organization. It's called Soul Brothers. And my brother-in-law, Rich Singer, is one of the founders of it. And I will never pass up an opportunity to promote a good cause like that, because that's pretty much what my life's about at this point. All right, any other questions, burning desires? I've been going 2 hours and 10 minutes here. If you've seen our homepage, I'm known for that. I can talk forever. Hopefully it's actually useful. But for the sake of the recording, we try to keep it relatively short. All right, guys, we will see you Thursday at 9:30. And that depends, David. I have a really, really old one that straps on my chest, and I've had it for 15 years. So, it was the one I used on my treadmill, and it still works. All right. Thank you, everyone. Thank you. Thanks for all the positive comments. I really appreciate it, and I appreciate your participation. And you can see why, even if you have to get out of bed, it's a good idea to attend live for those of you that didn't, although the vast majority of you did, and I thank you for that. The recording will be up in about 24 hours. When they're longer like this, it takes them more time to process in Zoom, and Zoom is busy because of the coronavirus. Everyone's working at home. Thank you, everyone. We'll see you Thursday. Do your homework. Practice watching this. Don't use tick charts. I'll talk to you later.